communicating I know what I'm doing. I have trolled in the past. I've done some silly things to get people talking, and it works. That's why I do those things. I'll say something to get people inflamed, or I'll make a snide remark about something, and it gets people talking. That is my marketing mechanism. That's how I do it. I don't have to pay for marketing. I get people twisted up in their panties, and then they go run around and they try to get their friends to come over to me and troll, and then their followers see it, and then they get intrigued by what it is I'm doing, and then all of a sudden now they're a student. So I am the master of harvesting other people, and I don't have to pay for it. I'm a master of manipulating the perceptions of people to get them to come and look and see, and they can test it themselves. And anyone that puts their head down to the charts and listens to the things I'm teaching, as I'm going to talk about today, it's a real hard argument to walk away from and think that you got it in the bag where you're right and what I'm teaching is wrong or a fallacy, because it's not. What I'm actually showcasing and teaching is the market itself. I'm showing you entries to the tick around the very specific PD areas I'm teaching that are supposedly non-existent or supposedly rebranded from somewhere else, but you can't find it anywhere else. At some point, you know, the folks that keep saying nonsense about what it is you're learning, or maybe that you have already learned and you're not bothered by it and you want to move on. I talk this way not because of insecurity, because there's always an increasing number of new people following me. And I only have a small little window to capture their attention and make them think about things critically, because the TikTok mentality is very pervasive right now on social media. So if you don't convince me in 30 seconds, then I'm moving on. Not that I need anybody. Like, I don't need anybody to come to my YouTube channel. I don't care if you ever buy my books. I don't care. I don't care if you like me. I mean, I really don't. That's not what this is about. I made an arrangement and a deal, and I'm living up to it the best I can. So if you choose not to use me as a mentor, that's fine. There's other things out there that you can use as a reason to get into a trade. That does not mean that's the reason why the market went up. And that's why you have to embrace these ideas of, well, the markets are random, so that's why we have to use money management. Okay. I don't like 50-50 odds. I don't like it when it's iffy. I like to know when everything is in my favor. And for most people, that sounds like that's an impossibility, but I'm showcasing it in live stream. I'm showing you where something might look like a setup that someone that watches my YouTube video one time, or they watch a sampling of them, and maybe you've done this yourself where you just want to go in and just cherry pick certain things. And if it's a real long video, I don't want to watch that one. I want to go to the real short ones, or I'll go to another channel that's taking pieces of what I say, and you're not getting the full panoramic immersion of understanding what it is I'm talking about. And it's fun seeing everybody with their YouTube channels and they're putting little clips together and they put music behind it and it sounds like Alan Watts talking to you, right? I'm a fan of Alan Watts, by the way. But the point is missed in that. It's wonderful engagement, traffic inducing things that other people are helping my channel with, but you're really not learning that way. It might cause a concern or a question to arise. I want to know a little bit more about that new day opening gap, or that opening range gap, or what's these inversion fair value gaps and whatnot. So it causes a matter of inquiry, some curiosity. They may not come to my channel or maybe even listening to these spaces with the express purposes of wanting to become a student of mine because they've heard things about me and whatnot. And that might change because of what they see and what they hear and what they've been struggling to try to become, which is consistently profitable, that may not have been afforded to them based on what it is they've been trying to employ as a methodology or learning from someone else or using some archaic, retail logic that is absolutely flawed. And I'm going to talk about how all of those retail concepts are flawed today and how you can adopt the mindset to cannibalize all of that, because that's exactly what I do. I do not trade with any retail logic except for noticing it in the chart and then fading it. That's the mindset of smart money. Smart money does not look at a wedge pattern or a bull flag pattern or a broadening top pattern or a cup and handle pattern and says, wow, this is it. This is where I'm going to get in here and trade. I look for those types of scenarios when it's diametrically opposed to where I believe that the algorithm is going to reprice to. And when I have those conditions, I'm going to trade with my largest leverage. If I don't have a retail concept there, it's not necessary. I'll just use a standard measure of leverage. It's not that big of a deal. But when I have everything in my favor, and I know I'm in an arm wrestling match or a tug of war with John Q. Public, who just read a book, or he just opened up his TD Ameritrade account, and he's never traded before. He's never studied price action. He just thinks he's going to try it out. If they're willing to share their opinion about what they want to see in the marketplace, and there's a classic retail pattern in price that they're mentioning, and I know that the market's most likely going to go the other direction, I'm literally going to enter right where they're trying to go the other direction in. And I'll have next to zero drawdown. And all you have to do is look at my executions, and you'll see that. When I'm entering, it's immediate delivery to covering the costs of a spread or commissions, and it's already in profit. Because if I'm short, I teach my students the same way. You want to be selling short when the market's going up, because that's the fastest route away from your entry. Because to go lower, I'm expecting it to reach to some kind of premium array. Okay, that's something that's algorithmically delivered for a last chance to get in, basically is what that is. And when you're bearish, every PD array that's a premium, while that market is in a sell program, that means it's getting ready to deliver sell side to sell side liquidity. That's the paradigm. That's the methodology of watching and viewing price action correctly, not with pseudo order flow on level 2 data. That's all scam. That's all fake. Sure, there's some real orders in that, but they're not all real. And because if they can be manipulated, that's a wonderful tool, like a red herring. Dangle a whole bunch of numbers at a particular price. And all of you guys that sit out there, and gals, that sit out there and you watch these things, these depth of markets, level 2 data, volume profile, VSA, and all that stuff, you get tricked all the time. And I'm sitting on the sidelines in the quiet, not saying anything in your live streams or whatnot. And I'm watching the people that see those numbers, and they get real excited. And the more people talk about a very specific level, because look at all those numbers. There's a so-and-so number of contracts. There's a so-and-so number of orders sitting at this level. As soon as someone says that audibly as a YouTube live streamer, or their chat box starts talking or calling out very specific levels because there's a certain number of orders supposedly above it or below it. As soon as I see that, I am ready to pounce. Because what that is, that's an indication that the weakest minded trader, the weakest equipped speculator, the most likely to lose individual in the marketplace is sharing their unlearned opinion at a real-time moment where I can measure that against what I see in price. So that's the absolute only reason why I watch majority of my live stream people that I like. Now, Tanya trades is my student, so she trades with my concepts. I don't fade her. I don't fade her chat. I just like watching her. So I might go into her live stream and say, hey, how you doing? Or just watch this level or that level. But I'm not trying to engage or manipulate that chat. I'm watching her for the sake of watching her because she's done well. Everybody else I'm using for their chat window. That's why I'm there. And sometimes the streamer might say something that's silly and it makes me laugh. But other than that, I don't want to follow anybody else because it's just chaff. But when I'm looking for a setup, I will absolutely go into the live streams and get a feel for sentiment because it gives me a real world, real time sentiment reading from less informed individuals. And that might sound mean spirited. It's not. It's not. If someone at a company was saying, "Hey, look, we're getting ready to introduce a really amazing new product line of something new and innovating," and you were a friend of that person, and that company was traded on the stock exchange. You have basically an inside tip. And you can frown on that and call it whatever you want to call it, okay? But if I had a long-term friend like that and they were saying, hey, look, this is ready to come out, I can't tell you exactly what it is, but we're going to have something amazing hit the market. I'm probably going to go in there and buy some call options because I have a perspective that's being afforded to me that I have faith in probably being correct because they're there. Well, if you look at the retail mindset, 90% of them are wrong. So if they're doing you a favor by collectively coming out and saying, this is what they believe, the market's going to go up or go up to this level or go down to this level, they're giving you a gift because they're giving you better than an overbought, oversold indicator because you can't personify the aspects of fear, greed, FOMO in just the number crunching of a overbought, oversold indicator. But if you could combine that with market sentiment, when you're bearish and that overbought, oversold reading is overbought, and it maybe is having a bearish divergence. But at the same time, now you have real people chattering or posting on their social media accounts. Get ready for the move. It's getting ready to happen. It's going to go up. And the more adjectives that they use, that means they're really trying to convince other people and convince themselves. So that means like that's the most overbought of overbought readings as you can have. And it's not necessary to have it on a plotted basis, crunching a period of candlesticks or bars over the last number of 10 or 15, 20 handles, or not handles, periods that you're going to use to measure for the overbought or oversold indicator. So I used to, as a young trader, I used to use the overbought oversold. And then I discovered that it's not necessary. Just looking at the range and then understanding what the PD arrays are inside that most recent range from the recent high down to the recent low. And you can trade just inside that range and never trade outside of it and make all the money you'd ever want. And if you write down the things I'm going to suggest to you today, I promise you they're going to serve you well. You'll have a better understanding about how the markets are booked from the market maker's perspective, not a dealer, because we're going to talk about that, because I'm going to make a very strong contrast between what you think a market maker is and what the market maker is for real. And why I'm always on side. How many times have you seen me do something wrong? Since I started doing the 2024 mentorship, how many times have you seen me done wrong? 0. I can tell you what fair value gap is real, which one's not. I can tell you how something's going to fail, what direction it's going to go, what liquidity it's going to reach for. That to me is boring, okay? But that's a skill set that you all are striving to learn. And I'm proving it with no confusion. It's right to the point. It's in live stream. I'm pointing to it. I'm explaining to it why it should do this, and it happens. It's not a pre-recorded session where people in the past have said, I'm doing multiple chances and then using the ones that work to look good. If you're seeing 7 weeks or so of me doing it accurately, is it a question why that you don't see losing trades by me? Because I know what I'm looking for. Now, if I trade every single instance where there could potentially be a trade there, and I don't filter it with my experience and the other things that I'm teaching as protocols, that tells me, yeah, this isn't probably going to be panning out for me. So while that might be noteworthy to mention while tape reading in the live stream, I'm not going to execute on that one because I know enough that tells me that that's not likely to deliver. So I'm going to wait for the next PD array. It's kind of like you're walking down the street. You know that bus is supposed to be there at 10 minutes after 10, no pun intended. But it just so happens that they got there a little bit early and maybe the bus driver's a little jerked out of gear and they don't sit there long enough for you to get there and get on the bus. Okay, no problem. Just sit there and wait 20 more minutes, 30 minutes, or whatever the schedule is, and it'll come back around. That's what it's like when you have an understanding of my PD arrays. I don't have to have every single entry I showcase. I want to have the highest one that's afforded to me if I'm bearish. I want to have the lowest one that's afforded to me when I'm bullish. But I might not be there at the time when the chart does it. I might get an alert that tells me, hey, look, it's done something. And then by the time I'm seeing that and then going to my charts, There may have been a very fast displacement, and I've missed the ideal lowest entry or highest entry. I'm not freaking out about that. I have 81 ways to get into a trade, and not all of them appear in every single price run. I just look for the ones that appear. And because I know what they look like deer tracks, and I've seen it with my dad taking me out into the woods, that's proverbial. That never happened, but I've used that analogy because I've recognized it, because I know what it looks like in the past, and I've traded it and executed on it. Out of those 81 specific PD arrays that may be allowed for me to enter on, there may have only been 3 that actually formed in that price run. It doesn't mean the other 70 plus aren't good. It just means that the algorithm did not implement them. So I know what I'm looking for. I know what time my setups are going to form. That's the most important thing. I know what time. I can set my entire schedule around 3 or 4 or 5, 6, 8 different types of trades that I know I can do one trade, walk away from the charts, and come back 5 minutes before the next one was supposed to be there, and not be there when it happens. Can your mentor, can your school of thought, can the people that wrote the books that you're believing as a religion, can they tell you that? Can they demonstrate that? Can they do it consistently? I bet you they can't, and I bet you can't. There's something different here, folks, and I'm trying to, without just taking you right to it, because we're gradually getting there nonetheless, but I'm trying to allow that moment of astonishment where you see it and it jumps off the chart and you're like, oh, and for some of you, you're starting to see some of those things in the comment section. And I'm allowing you to keep that to yourself. The worst thing you can do is go blab it on social media, because then you'll ruin it for everybody else. Let them have that same moment of astonishment. Because if they don't, it's okay. Because when I wrap up the live streams going into the last week of October, because we're not live streaming in November and December, the holidays, that's my time. I'll do pre-recorded videos whenever I find a time to do it, but live streaming stops the last week of October. So by then, you'll know everything that I wanted to teach in the 2024 mentorship. So it's not like a long drawn out process. You'll have wonderful resources to tap into, protocols, processes, procedures, and some of them we'll cover today. Okay, but I think most of you have realized that there's a little bit more than just simply classic support and resistance or what you thought was supply and demand. There's something else totally different. And the first and foremost factor is time. And none of those other applications or approaches to trading ever reference time. And that's why 99.99999% of every aspect of retail trading is flawed, because they don't have any reference to time. It's funny because there's people out there that do mentorships. They talk like they're special in trading. They talk with my vernacular, my language. They use my words, but they claim they didn't learn from me, and they still ignore the fact, even though they might say there's an algorithm. There's an algorithm. If there's an algorithm, it has to run on time. So right away, you just eliminated the frauds right there, okay? Because they don't know what they're talking about. If anybody submits to the idea that that market is driven by an algorithm, there's a lot of people that don't. There's a lot of students that are watching me on YouTube that are very respectful when they leave their comments and say, this was a wonderful teaching on price action. Even though I don't believe there's an algorithm controlling price, this was very illuminating. Well, I can appreciate that. And that's all I've asked for. I'm not trying to convince you. I just have fun doing it, where I'm ribbing people, twisting the knife proverbially, just to let them know that I find it astonishing that you can't see it. Because if I can time my trades and tell you what time they're going to form, and I can tell you what price they're going to be at, look at this week. Look what I outlined just this week and what I executed on. Folks, that's perfect. Like, that's perfect. And it's the logic that's been explained to you. And it's using something from the previous day that nobody else would have referred to. First presentation, fair value gap. I've mentioned that in passing in Twitter Spaces last year. I took these little hints in these long discussions because it's just too good. But if you listen and you take notes and you think, why did he say that? That is a clue. That's a little bit of a little golden nugget just buried underneath the surface of that discussion. It doesn't take much digging for you to discover what it is. But if you just listen to me and you don't go into your charts and examine what could be seen around that thing he just mentioned, all of a sudden, when you start studying it and looking at how price behaves around it, and you hear that I'm always referring to the last 3 days, the last 3 days, the last 3 days, because swing highs form with 3 candles. Inside of that element of time of the last 3 days, you're never going to miss that real sweet spot. If you're trying to trade swing trades, like if you don't